Good morning, everyone. It is Julie here with Tip Ranks. As I mentioned in this morning's pre-market video, we are following up on three major banks' earnings reports that just came out this morning. We're taking a look at JP Chase, Wells Fargo, and Goldman Sachs. So we're going to take a look at the results of their earnings reports and how they stacked up against analyst expectations, what commentary was given both on the past quarter and looking forward, and what analysts have upgraded or reiterated their price targets so far. Now, I will include timestamps down below for each of these three companies if you're looking to jump ahead to your favorite. And just before we get into these three big banks' earnings reports, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to download the Tip Ranks mobile app on your Android or Apple device to stay up to date with all the latest analyst ratings and manage your smart portfolio on the go. Links will be down in the description. Okay, now let's get right into it. Starting off with JP Chase. They trade under the ticker JPM and are currently at $153 per share. JP Chase, the largest U.S. bank by assets, reported results this morning that blew past analyst estimates. Taking a look at their adjusted earnings per share, they came in at $4.50. That was versus a $3.05 estimate, so just crushed that estimate there. For the revenue, they came in at $32.3 billion versus $30.42 billion estimate. During the quarter, the bank earned $14.3 billion in net income, up $11.4 billion from the year prior, driven by credit reserve releases of $5.2 billion. That compared to credit reserve builds of $6.8 billion in the prior year and helped boost earnings by a $1.28% increase in the earnings per share. In his commentary, CEO Jamie Dimon said its credit reserves of $26 billion are appropriate and prudent, all things considered. The CEO also wrote that with all of the stimulus spending, potential infrastructure spending, continued quantitative easing, strong consumer and business balance sheets, and euphoria around the potential end of the pandemic, we believe that the economy has the potential to have extremely robust multi-year growth. He also added that if all the government programs are spent wisely and efficiently, focusing on actual outcomes, the benefits will be more widely shared, economic growth will be more sustainable, and future problems like inflation and too much debt will be reduced. So some optimistic sounding future outlook there. Recently, he had referred to loan demand as remaining challenged, but he then walked back that characterization, saying, "I think I made a mistake in my quote using the word challenged. What happened is the consumer has so much money, they're paying down their credit loans, which is good. Their balance sheet is excellent, outstanding shape." He insisted that consumers are ready to go and are starting to spend money, and that's not the same as loan demand when the economy's weak. Breaking down JP Morgan's results a bit further, their banking revenue jumped 70% to $4.5 billion. Investment banking revenue hit $2.9 billion, up a whopping 222% year over year. And their equity markets revenue hit $3.3 billion, up 47%. Now, taking a look at the analyst ratings, we still haven't heard from many analysts yet today. We did have one hold rating come from Oppenheimer that didn't have a price target. The most recent price targets came within the last week, between 15 and 21% upside potential, and our average upside potential comes in at 4.6%. So we'll be keeping an eye on that to see if some more price targets start to roll in today after analysts have a chance to digest all the report results. Now, second on our list, let's take a look at Wells Fargo. Under the ticker WFC, they're currently trading just shy of $40 per share. Wells Fargo's earnings topped estimates on a $1.05 billion release of loan loss reserves. Their earnings per share came in at $1.05, beating the estimated 70 cents per share, and their revenue came in at $18.06 billion versus the $17.5 billion that was expected. Wells Fargo results were helped by a net benefit of $1.05 billion from reserve releases. Banks had bulked up their credit loss reserves last year as the pandemic pulled the U.S. economy into a sharp recession, but the financial firms have started to release those reserves as the recovery takes shape. Hearing from Wells Fargo CEO Charlie Scharf, he said our results for the quarter, which included a $1.6 billion pre-tax reduction in the allowance for credit losses, reflected an improving U.S. economy, continued focus on our strategic priorities, and ongoing support for our customers and communities. Charge-offs are at a historic low, and we're making changes to improve our operations and efficiency, but low interest rates and tepid loan demand continue to be a headwind for us in the quarter. So hearing about those headwinds definitely coming off as less optimistic than the JP Chase comments. Of the 6 biggest U.S. banks, Wells Fargo has the smallest Wall Street trading and investment banking operations, areas that have been on fire in recent months thanks to a red-hot IPO market and unprecedented Fed support. Last year, Wells Fargo was the only bank among the 6 biggest to be forced to cut its dividend after the annual Federal Reserve stress test. The firm also posted its first quarterly loss since the financial crisis and announced it was cutting billions of dollars in expenses. Now, so far, we haven't seen any analysts reiterate or upgrade their price target for Wells Fargo today. The most recent come between 5 to 13 days ago, ranging from 5% to 12% potential upside. Overall, it comes in as a moderate buy with an average price target that would be a very slight downside of 0.5%. Now, last but certainly not least, we have Goldman Sachs. Trading under the ticker GS, they're currently at $339 per share. And Goldman Sachs reported record results that topped the street amid booming investment banking. The bank posted per-share earnings of $18.60, absolutely crushing the $10.22 estimate of the analysts. The results represented growth of 498% from a year earlier. Their revenue of $17.7 billion easily topped expectations of $12.6 billion. At Goldman, the deluge of SPACs helped push investing banking net revenues to a record $3.77 billion for the quarter, including record equity underwriting. The headline investment banking revenue number exceeded the $2.9 billion estimated and represented a 73% surge from a year earlier. So fantastic numbers from Goldman Sachs there. Now, hearing from their CEO, David Solomon, he says that we have been working hard alongside our clients in preparation for a world beyond the pandemic and a more stable economic environment. Our businesses remain very well positioned to help our clients reposition for the recovery, and that strength is reflected in the record revenues and earnings achieved this quarter. So Goldman Sachs sounding pretty comfortable and optimistic as we move into the recovery phase of the economy. Now, hearing from one Wells Fargo analyst, Mike Mayo, he says that Goldman is converting mind share to market share probably better than any player. The main question is sustainability, but our view is that Goldman is in the sweet spot for a booming investment banking and advisory business, as each company in each industry globally has a rethink of its business strategy post-pandemic. So far this morning, we've had 2 analysts either assign or reiterate a price target to the Goldman Sachs stock. One of them coming from Merrill Lynch with a $390 price target for a nearly 15% potential upside, and the other is a newly assigned price target from Oppenheimer with a $468 price target, which would be nearly a 38% growth potential. So of the 3 bank stocks, definitely some more bullish outlook from analysts on the Goldman Sachs stock. But like I said, it is early in the day. Analysts are still pouring through these results, digesting all of the information, and I'm sure we'll see a lot more reiterated, upgraded, changed price targets come between today and tomorrow. Now, we still have a number of exciting earnings reports coming up this week. Tomorrow morning, expecting to hear from Bank of America and Citigroup, as well as Taiwan Semiconductor, which I know isn't bank related, but still has been a hot stock this year. So we will be keeping you up to date here with all of these exciting earning reports results. So make sure you check back for all of our latest videos. Make sure you leave your thoughts on these 3 companies in the comments down below, as well as what other earnings reports you'll be keeping a close eye on this week. I always love hearing from you guys. Thank you so much for watching, and we will see you back here next time.